Have you ever wondered what your hit rate would be if you knew the exact moment when the big banks and investment funds are entering the market? Well, that's exactly what I'm going to show you in this video. We're going to analyze a free indicator on TradingView that reveals institutional activity happening behind the scenes. If you want to trade like the pros, stick around because this video is going to open your mind. This here is the 1-hour chart of Euro to US dollar. And just take a look at this trade. When the smart money started coming in, we would have opened a position, and the chart simply went up 1.57% after that. And as soon as the indicator started showing signs of weakness in the move from the institutional side, it was best for us to start closing out our positions, and that would have been pretty close to the top that the market made. The secret here is simple. We get in together with the institutional money. And I'm not talking about smart money concepts. I'm talking about real sharks, banks, hedge funds, and big players. So how do we manage to spot the presence of these guys? Simply by using this indicator called Bullish Smart Money, created by Loke in '94 on TradingView. To add the indicator on TradingView, just go to the Indicators tab. You're going to look for Bullish Smart Money and it'll be this option. Just click on it and it'll show up on your chart. Now we're going to make a few changes to the indicator. Go here to the settings arrow. You're going to uncheck this option, this option, this option, and scroll all the way down to uncheck the Banker MA option. And hit OK. Now the indicator is much cleaner so you can look at it and spot your entries. The heart of the indicator is basically this histogram. Now let's understand it. When there are no bars here in the histogram, it means there's little activity from the big players. It's better to avoid trading at this time. When the bars are light blue, institutional buying is starting, so it could be a good buying zone. When it's light green, institutions are holding their positions and buying pressure is high. When the bars turn brown, the market is doing a retest. It's time to think about starting to close your positions. When the brown gets darker, almost black, institutions are starting to exit, which is a warning sign for you to get out too. And when there's a red bar, like this one here, it means institutions are liquidating their positions, so it's best for you to exit your position completely as well. Up here, the indicator also shows these clouds, where there's a green part and a red part, indicating the possible trend that's forming. We also have this moment where a red dollar sign appears, which indicates possible selling points or profit taking. In other words, if smart money entered down here, up here they were starting to take profits, not closing all positions, but part of them. And finally, we have a moving average that moves along with the histogram. If the bars are below it, there isn't enough institutional strength to enter, and if they're above, it means institutional strength is gaining momentum and actually entering the market. Oh, and an important note, this indicator is only for buy entries. It wasn't developed to detect sells, so we only use it on the buying side. Now let me show you a buy trade, an example we could have taken. Notice that down here on the histogram there are no bars, which tells us there are no smart money positions. Institutions aren't interested in this price zone. However, their speculative activity is already happening, which is shown by these little dots that start to appear. So we can keep an eye on it because possibly, just ahead, there could be an institutional entry. And just check out this candle right here. It's an extremely strong bullish candle, with no wick at all. Just by looking at the candle, it clearly shows that, yes, a lot of money came in at this moment on the chart. And check out what our indicator was showing. Institutional entry, with the bar well above the moving average, which moves along with the histogram, indicating a trend reversal to the upside here in the cloud. And what did the price do after that? It only moved upward. So how could we have caught this entry? By placing our entry at the close of this candle, setting our stop slightly below the candle's low, and we could have set the same target for a move upward. The price would have reached it and gone even further within a few hours. Here's another example. Notice that after the institutional player had a very strong presence in the market at this point, they lost interest here, even bringing the bars on the histogram down to 0. However, their activity was still ongoing in the market. We can see this from the little dots that appear here. The moment a bar appears on the histogram that breaks above the moving average, we can make our entry, because the institutional player is putting new money into the market. In other words, on this bar here, they were making their entry. So we could have entered as well, placing our entry right at the close of this candle, our stop a little below its low at 0.16, and our target 2 times higher. And the price quickly reached our target up here, showing the strength of the institutional player, who stayed in the market for quite a while, driving this rally. When the institutional started to exit, the price began to correct as well. Notice at this point here, where the institutional closed out their positions. The market then, it was just a drop. Conclusion: you should explore this strategy, run your own tests, and adapt it to your style. And remember, never trade with real money before doing a backtest. And if this content helped you in any way, leave a like and subscribe to the channel so you don't miss the next videos. And remember, this content is for educational and informational purposes only. It is not a recommendation to buy or sell assets. Do your own analysis and consult professionals before investing.